Welcome to Factful Finance. Today, we're diving into a pressing question on many minds. Why is the housing market so high? Did you know that as of late 2024, the average home price in the United States reached an astonishing $400,000, with some areas seeing increases of over 20% in just 1 year? This skyrocketing market has left many potential buyers puzzled and frustrated. So, what's driving these high prices? Before we explore, let's clarify that this discussion is for educational purposes only. Listing certain tools or products doesn't imply endorsement, and it's always best to consult with a professional for personalized financial advice. To understand why housing prices are soaring, we need to look at a few key factors: supply and demand, interest rates, and economic trends. First up is supply and demand. The COVID-19 pandemic caused a significant disruption in the housing market, with construction delays and increased demand for larger living spaces as people adjusted to remote work. This created a scarcity of available homes. In fact, a report from the National Association of Realtors indicated that inventory levels were at their lowest in over 2 decades. When demand outstrips supply, prices inevitably rise. Next, let's talk about interest rates. The Federal Reserve has kept rates low to stimulate the economy, making borrowing cheaper. For many home buyers, this has translated into increased purchasing power. However, as rates begin to rise, we may start to see a cooling effect on the market. It's important to remember that even a small change in interest rates can significantly impact monthly mortgage payments, which in turn affects what buyers are willing to spend. Now let's consider economic trends. The U.S. economy has shown signs of recovery, leading to increased consumer confidence. Many buyers are eager to invest in real estate as a long-term asset. For instance, Emma and Liam, a young couple looking to start a family, recently decided to buy a home instead of renting, believing that real estate is a more secure investment. They figured that with the current trends, investing now would yield better returns in the future. Also, we cannot overlook the influence of institutional investors. With interest rates low, many large firms have entered the market, purchasing single-family homes to rent them out. This trend has further tightened the supply for regular buyers like Noah, who is searching for his first home but is competing with deep-pocketed investors. So, what can potential buyers do in this high market? It's essential to have a solid financial strategy. This includes getting pre-approved for a mortgage, exploring different financing options, and perhaps looking at areas where housing prices have not yet surged. For example, Olivia and Elijah managed to buy their first home in an up-and-coming neighborhood where prices were still relatively low, allowing them to build equity as the area develops. As we wrap up, remember that understanding the dynamics of the housing market is crucial for anyone considering buying a home. By staying informed and prepared, you can navigate these challenges more effectively. What's your biggest takeaway from today's discussion on the housing market? Share your thoughts in the comments below. Thank you for tuning into Factful Finance. If you appreciate what we do, consider subscribing and hitting the bell icon so you won't miss out on valuable insights that can enhance your financial journey. We believe you'll find the video suggested on screen next particularly interesting and beneficial for your financial goals. Until next time, keep learning and growing.